Traders, Anthony here. I'm looking at the Kiwi Swissy. This is in a strong bullish trend on the weekly time frame. Let's mark up some levels and we'll go down the time frame and I'll give you my take on a trade idea. Okay, so we're trading into this level here. Okay, you can see the reaction. Let's just mark that up as a resistance. Bear with me for a sec. Let's pull that across, go, done. Okay, big resistance. Now we're seeing the pullback here. Nice strong bullish trend. Next target will be these highs above here. If this continues. Go down to the daily. Go back, have a look. Okay, so resistance here. I would say we mark up, well, on the daily time frame. It's going to be a bit more specific with these levels. I'll pick up the highs above there and the highs above these candles here. Okay, so we've got three. Well, if this pulls back and we get an entry, then three specific levels where we can target our TP levels. So daily time frame, we've marked up our key levels. Now what we're getting here is a retrace. You could, look, there's a few ways you could approach this. You could approach it from a daily time frame point of view, and in which case I would pull a fib from, have a look at this 4-hour candle here. So we've got this bullish order block. Mark that up, OB, bear with me. Okay, just do that. Call it support. That's a daily order block. And you could go for swing low, swing high, an entry. Okay, if you're going to swing trade and you're looking for a swing trade opportunity, something like that would work. Stop under the order block, something like that. So that's about a 3R. Okay, so that's an idea for the daily time frame. Now that could take however many days if it rolls over to get there. And you might want to look at this from a lower time frame perspective. So looking at it from the 4H, it's the same strategy. And I'm looking for, and I've mentioned this in previous videos, but swing low, swing high, swing low. Okay, swing high, swing low, swing high. I'm always looking for the Fibonacci pullback into this 50 to 618. There's an entry long. All right, now we're going somewhere with this. We're going to have a look at how we can get involved in here. And it's either, we speculate and we go with a limit buy. Let's just mark that up. Okay, so there's a trade that would have been a nice outcome. Let's grab our fib again, low to high. See, we don't get the pullback into the 50% here, but what we do get, we get this rotation. So there's a way that we can actually get involved with this without going for that Fibonacci pullback. We can come down to the lower time frame and look for an opportunity to get in here. So that's what I'm going to be doing with this. Let's have a look at this Fibonacci. I mean, I prefer the fib pullback, and if it lands in here, well, actually we've had a touch on the 50. So that qualifies this for a potential buy right now. Okay, you can see that. Swing low, swing high. We're in there. All right, so let's go down the time frames now and we'll get our bearings. We'll go down to, in fact, before we do, we've got this bullish 4-hour order block. Okay, we'll mark that up. And then we go down now to a 15. All right, this is what I'm waiting for now. This is actually traded into my buy zone. So I'm now waiting for price to shape up and to give me and to invite me in. So we've got this currently trading. In fact, I'll even go down to a 5-minute chart. All right, this is what I want to see now. Yeah, the 5-minute might be a bit fast. See how we've got this bullish move here? That could catch you out. So let's just go back to the 15. I don't want to make this too difficult. The 5 might be a little bit fast for some people. So what we're looking for here is simply this. We've got a trend. I want to see it hold here. All right. Fake out, shake out, displacement. That's what I want to see happen. Now it's trading into the 50. where are our key levels? We could mark up, okay, this bullish order block here. That's on the lower time frame. So this is big support down in here. But the thing with this is, see this candle here. See how this displays. See how it's a one-sided thin candle. This is a bullish imbalance. So it could be that this is looking to hit that imbalance, and it has done. The imbalance is the candle left high, the candle right low. And if we pull that through here, it's pulled into the imbalance, and that really qualifies this. So let's just mark that up as an imbalance. Okay, that might be as far as it goes, and we've got support at this high here. This rotation could happen here, or it could happen down in here, could happen further. But at some stage, this is going to rotate if this trend continues bullish. So wherever this starts to rain and this plays out, I'm waiting for changing character here. So we see it spike up and take out a previous high, shift in the structure in the trend, and then I want to see it hit stops under. And then I want to see this displacement. This is an ICT model that I'm talking about here. All right, displaces and traces back down into, retest the high. I won't go into imbalances and what have you in here, but this is the basics and a simplified version of the kind of thing that I'm going to be looking for. Retest of the high, and this sets up higher highs, higher lows, and away we go. Now I've got, well, I can't mention it here on Tradingview, but I'll leave it at that. Have a look at the information in my profile. That's it, guys. This is the kind of price action I'm waiting for if I'm in front of the charts and I see that. And you can also set, look, we've got alerts that will give us this. So I'll be setting alerts for this so that it goes off on my phone. Then I can jump into this chart at any time. As soon as the alert goes, I could be anywhere, out to dinner, in bed, whatever. If it wakes me up, I can come in here and I don't have to miss this trade. And I think that's probably what I'll do. Okay, guys, look, that's my take on Kiwi Swissy. It's in a bullish trend on the higher time frame. Now, we're pulling back, and I'm just waiting for the opportunity here to see where this rotates, and I get an entry. Now, stops, targets, well, they've got your target all sort of, but wherever this occurs, my stop will go, here's a thing. I'll draw it out for you. Trend. We get that. It's a really simple concept. When it's trending, if that's your entry point, stop under the previous low. By default, I'll go with a 2R, but depending on where these levels are, all right, well, I'll go for the low of this level here. And that's a 2.39, right? So there's a target. If I don't have higher time frame levels on the chart, I'm just going to, by default, go for 2R. Right, something like that. Stop loss under the previous low. That's it. Entry on that rotation. And we're off, okay? So if that's the case, then if that's an entry here, well, stop could go under the low, under this range, if you're going to get in at this this breakout. Something like that, and that could give you what? That's 4.5R if it happens here. That's nice. Okay, guys? That's my take on Kiwi Swissy. I love your comments. Definitely leave a comment below and share the love. And with that, I hope you have a great day, safe trading, and we'll see you in the next video.